Money is a frequent topic in the news due to the failing dollar, escalating debt, and the fact that conflict is the only thing sustaining the global economy. Bitcoin is gaining recognition in the mainstream media. Financial institutions like BlackRock are heavily investing in Bitcoin. Governments resist this because they are unable to track Bitcoin transactions, resulting in loss of tax revenue. In the US and the EU, things have escalated to the point where transactions from $100 or euros and up are being tracked. Many claim that Bitcoin is used by criminals, yet, as exemplified in Breaking Bad, cash is still the favored currency of criminals. Money is a tool for freedom and democracy. Let's look back to how money came to existence, and the end of the video will look to the future of money. In ancient times, when the barter system was the norm, goods were exchanged for other goods and the value was subjective. As trade route expanded, we needed a uniform way to pay. Coins were initially made of gold and silver. However, that wasn't really practical. The Tang dynasty developed paper notes that offer a lighter, more convenient alternative to heavy metal coins. First, they had random people in between, handing out IOUs. But soon, banks took over as the middleman. Eventually, banks made sure they had the value of money in rotation backed by gold in their vaults. Fun fact, did you know that the US saved gold bars in their vaults for other countries and didn't want to give it back? This was a result of mounting economic issues, including a growing balance of payments deficit and excessive military spending, which led the US to realize it no longer had enough gold to cover the amount of dollars in circulation. From then on, it was only backed by the government. The system was built on trust. However, the stock markets didn't respond negatively, they went up. Today with crypto, you can lose all your money and won't receive a penny back. But the plus side is that your money is not handled by a middleman, a bank, who you pay per transaction, lends out your money and gives interest in return. The late 20th century ushered in the digital revolution, transforming physical cash into digital numbers. Credit cards, online banking and electronic transfers became the new face of money, offering unprecedented convenience. However, you did lose touch with the value of money. You spend more because it's not physically there, and it feels like less pain when you spend it. As a matter of fact, credit card companies add incentives to make you feel good about spending money, such as cashback policies. In the 21st century, cryptocurrency emerged as the newest form of money. After the banking crisis, people were ready for something new. Built on the blockchain technology, it promised security, decentralization, and a break from traditional banking systems. It's invented to cut out the middleman and give you more autonomy and choice and freedom to spend your money. Today, Visa also offers a credit card to pay with Bitcoin, and more banks are open to microtransactions via the Lightning Network. However, in my country, it was shut down by the government. Ironically, a local bank, a partially government bank, also invests in Bitcoin. What do you think the future of money will look like? The crypto community will work with the pro-crypto and privacy countries to advance the network. Central banks will start the central bank digital currency, CBDC, and incentivize using it in the beginning. The same with digital IDs. However, money will be drawn away from the governments, and they will also embrace crypto and privacy laws. The community will improve accessibility and equality by providing new ways to pay without having to worry about inflation or being stamped as a criminal. Theoretically.